Hello and welcome to the Federal. Foreshadowing future increases in lending and deposit rates. The Reserve Bank of India's Monetary Policy Committee, which is the MPC, hiked the repo rate. The repo rate is the rate at which the RBI loans cash to banks by 35 basis points. In addition, the MPC also lowered its growth forecast for the current fiscal year from 7% to 6.8% due to the bleak global economic outlook while maintaining its retail inflation forecast at 6.7%. Now, banks are expected to raise their interest rates on loans as the cost of capital rises. As a result, the minimum payments required to keep up with credit cards, student loans, and other debt will rise. As up to 43.6% of all loans are tied in some way to the repo rate. To discuss this development, I have my colleague and senior journalist Giri Prakash with me. Thank you for joining me, Giri. My first question is, what are the salient features of the RBI announcement?
Thank you, Nisha. The salient features of the RBI Governor Shaktikant Da's monetary policy is that, first of all, he puts it in a very positive note, saying that the India's GDP is growing steadily, and it's clinging on and performing well in a world which is witnessing slower growth. So that's number one. And he talks about how headline inflation has reached its peak and is starting to decline, which is another positive thing. And a similar trend is also clearly visible on a worldwide or a global level. The third one, which is very significant, he talks about how the inflation is decreasing. All this exercise that has happened so far is because of to contain inflation. So, which obviously means that they are seeing some positive results. And however, he also issues a note of caution and says that we must avoid becoming complacent. We need to be quick and aware when taking action. Usually, the central bank or the Reserve Bank of India their stated policy is to be cautiously optimistic, and this comes out very clearly here. And the fourth one, he talks about the struggle to stop inflation is far from over, which is again on a very cautious note. Therefore, he talks about how they are prepared to carry out actions involving the injection of money or infusion of money while watching for long-lasting indicators of a shift in the liquidity cycle. Then, of course, he talks about the historical significance of the Indian rupee and how it has always it has been on a foundation of built on a foundation of perseverance and consistency. And he talks about how the fact that they do remain committed to taking action when necessary, but we won't begin any liquidity injection initiative unless there are relevant signs that the liquidity cycle is turning. And the sixth one, it is simple to control the current account deficit. Let there be no room for doubt. These are the salient features of the RBI's latest monetary policy.
So now that we've gone through the salient features, Giri, how will this affect the borrowers, especially those who are thinking about taking home loans?
So let us take one example, and then that sort of clarifies a whole lot of issues here. So let's assume there is a borrower and he has obtained a 30 lakh rupee loan with a 20-year repayment cycle and an interest rate of 8.5%. The amount as per that would be around 26,035 on an equated monthly installment for the next 20 years on an interest rate of 8.5%. Now, if the repo rate, which is actually gone up by 35 basis points, were taken into account, the equated monthly installment would be 26,703 rupees, which means the borrower will pay around 668 rupees per month on top of the initial house loan payment. Additionally, if you put all of them together, he would be required to pay an interest of 1.6 lakh rupee more over the course of the 20-year loan. So this more or less tells you the kind of impact a home loan would have.
Giri, my last question for this session is why does the RBI keep increasing their repo rate and when will this cycle end?
See, if you look at the Federal Reserve, the US Federal Reserve, they have raised interest rate by 350 basis points since April 2022. I mean, this year's April, all right. So while the Reserve Bank of India has only raised rates by 225 basis points since then, and repo rate hikes have occurred three times before, each by 50 basis points. Now, the reason why the RBI has done is to stabilize the rupee's value, and we know how it was actually going haywire. And further rate hikes are expected to achieve the same result while reducing underlying inflationary pressure. Mr. Shaktikanta Das did say that inflation rate is going down, but still they need to be cautious about it. And quite a few forecasters believe that the central bank will raise rates to 6.5% by February 2023. So we can expect another rate hike in a couple of months' time, which will likely remain for the rest of the year. So obviously, hopefully there won't be another rate hike after February. And having said that, some analysts say that the governor's tone was a bit hawkish. And while with the GDP forecast cut, he has kept the inflation forecast steady. And the market expected that the governor to signal that the rate hike cycle is ending. But this policy shows no signs of it. Even though few other analysts believe that it will stop from February, but there is no, obviously, we really can't predict what the RBI is going to do from here onwards. We can only hope that it happens. But the market is not reacting much to the policy. And so let's see how it pans out in the next few months. And then we have the budget coming in, and we need to know what exactly the union budget will turn out to be, and will the government come up with populist schemes, or will it take some harsh measures? We should also realize that the government hasn't done anything since 2014 on income tax relief for the common man. So, and then in 2024 are the general elections. So it's going to be a very interesting year, 2023. So let's see how it goes.
Thank you for your inputs, Giri Prakash. Viewers, for more such updates, log on to thefederal.com and visit the Federal's YouTube page. Thank you.
Subscribe to the Federal's YouTube page for more interesting updates.